Hey traders, in this video, I am going to reveal an effective price action pattern to make consistent profit in trading. So if it is something you are interested in, kindly hit the like button, also subscribe to my channel, and turn on the notification bell to stay updated each time we make new videos. So without further ado, let's get started. Now, the pattern that we're talking about today is called the 3-bar pattern. So what exactly is the 3-bar pattern? It is a high win rate candlestick pattern that is characterized by having 3 consecutive bars: an igniting bar, a pullback bar, and a confirmation bar. Once this sequence of candles appear in a chart, it is usually followed by the price forming a strong trend afterwards, which we could take advantage of. So now you're going to learn exactly how to identify the pattern, evaluate the trade setup, and know when to enter and exit the trade. So first, how do we actually spot the 3-bar pattern? So in either direction, the pattern must exhibit 3 consecutive candlesticks. The first candlestick is called an igniting bar, which is a candlestick with a large body that signals strong momentum. The second candlestick is called pullback bar, which is a small candlestick with an opposite color of the igniting bar. Ideally, the overall size of the pullback bar should not exceed half of the igniting bar's body. The third candlestick is called the confirmation bar, which is a medium to large-sized candlestick that closes above the pullback bar. Once the sequence is complete, you can enter a buy position at the confirmation bar's close. Let's see how this would look in a real chart. So here, we can see a green candle with a large body that formed, which is an igniting bar, followed by a small red candle, which is our pullback bar. And then we have a green candle that closes above our pullback bar, which is our confirmation bar. So because the momentum of the sequence is heading upwards, it indicates that this is a bullish 3-bar pattern. So we take a long position at the close of the confirmation bar. And after the pattern is formed, notice that the price made a nice uptrend. So that would have been a good long entry opportunity. Let's look at another example. Here, we have a nice red candle with a large body signaling a strong downwards momentum, which will be our igniting bar. Then followed by a small green candle, which the size does not exceed half of the igniting bar's body. This will be our pullback bar. Next, we also have a red candle that closes below it, which is our confirmation bar. In this case, it is a bearish 3-bar pattern because the momentum is heading downwards. So we could open a short position at the close of the confirmation bar, and we can see that the price made a downwards movement after the pattern has formed. So when traded correctly, the 3-bar pattern is a very simple and high win rate strategy. However, there are mistakes that traders tend to make when trading this setup, which could lower its win rate and cause them to lose money instead. So to make sure that you don't fall for these common mistakes, I'll be showing you how to avoid them. Mistake number 1. So we know that an igniting bar is the first candle that formed in a 3-bar pattern, and it's also the most important. Reason being that it shows that high liquidity is present. So in order for an igniting bar to be valid, it needs to have a large body. So the mistake that traders usually make is that they try to force an igniting bar, even if it's not there. Remember, if the candle's body isn't significantly larger, then it's not an igniting bar. Here's an example in this chart. Here we can see what looks like at first glance a 3-bar pattern, because we have a green candle, a small red candle, and another green candle. But in reality, this is not a good 3-bar pattern setup, because the opposite igniting bar doesn't have a large enough body. And if you compare it to the previous candles, it has a relatively similar size. Remember, an igniting bar needs to be significantly larger than the rest of the candles. So if you have one candle that doesn't fit the criteria of the pattern, don't risk a position. Now, here's an example of what a valid 3-bar pattern looks like. As you can see in this setup, the igniting bar clearly has a large body. And notice how it's significantly larger than the previous candles that formed. Mistake number 2. On some occasions, A 3-bar pattern may form after the price had already made a sharp movement in a short period of time, like in this example. So this is generally not an ideal setup to enter long positions, because quick sharp movements like these are generally not sustainable and will result in a pullback. However, patterns that appear in the middle of a clean trend is much more valid. So a clean trend can be identified by the price gradually heading towards one direction, like in this example. Remember, the key word here is gradual. It's not a sharp movement. In this case, the trend tends to be more sustainable. Now, before we move on, if you like this video so far, kindly hit the like and subscribe button. It only takes 2 clicks, but it means so much to me. Now back to the video. Advanced 3-bar pattern strategies. Now, although the 3-bar pattern is a powerful strategy, there's still so much room for improvement. You can actually combine the 3-bar pattern with other complementary strategies to further increase your chances of profitable trades. Advanced strategy number 1. 3-bar pattern plus trend confirmation. One of the strategies that consistently gave me a high success rate is by combining the 3-bar pattern with a trend confirmation indicator, such as the exponential moving average. So let's look at this chart as an example. Here we have a 50-period exponential moving average applied onto our chart, which acts as our trend confirmation indicator. So this indicator can now help us by making sure that we're not trading against the main trend. If the price is below the indicator, it indicates that the overall market is on a downtrend, meaning we only look for bearish 3-bar patterns. And if the price is above, we would only look for bullish 3-bar patterns. So the idea behind this strategy is that we want to trade the 3-bar pattern while following the main trend. Like in this example, we had a bearish 3-bar pattern that formed while the price is below the moving average. So this is a good opportunity to enter short. Now for your risk management, you can place a stop loss above the pullback candle's wick and set a profit target at 2 times the stop loss. And as you can see, it was a profitable trade. Advanced strategy number 2. 3-bar pattern plus key levels. Another strategy that you can use in combination with a 3-bar pattern is by applying key levels such as support and resistance. Let's observe this chart as an example. Here, we can see that the price reacted to this level multiple times, making it a strong key level. So we just marked it out with the rectangle tool. Next, as price approached the level again, it failed to break through it. And we can see that the price slightly bounced upwards, while forming a bullish 3-bar pattern. So what this setup tells us is that first, price has respected this level multiple times in the past. And now there's a potential that it might do so once again. And because we have a bullish 3-bar pattern that formed, it further strengthens the idea that it may bounce upwards. So this is now a good setup to take a buy position. For your risk management, you can place a stop loss slightly below the pullback candle and set a profit target at 2 times the stop loss. And letting the trade run, you can see it was profitable. So that is all for this video. If you want to get more insights on how to trade profitably, you can check other videos on my channel. Thanks for watching. See you in the next video.